Next video in our series today, we're going to be looking at higher highs and higher lows and how to spot the beginning of uptrends or the end of uptrends and the starts of downtrends. So for the example today, we're going to be using BNB, and what we're looking at is the swings, okay? So it's really important to understand what a swing is. A swing is the movement in the price when it makes a swing to the upside, then a swing to the downside, swing to the upside, swing to the downside. Now the chart isn't just straight up and down movements, right? It's always these swings that are created along the way. So the first thing I'm going to show you here is the beginning of this downtrend, okay? You had this high at the top, you had this low over here, and once the price came down, it put on a low that was lower than this low, a high that was lower than this high. So what we've started is a downtrend. Once we've gotten down to this point, we're looking for a reversal for the beginning of a new uptrend. Okay, so this low over here, and then this high over here, and then this next low is what we're focused on. So as you can see that this low is higher than this low, and this is the high that needs to be beaten for the uptrend to begin. So your first signals that you're going to see is when you get the first low, then you see the next high. This high wasn't as high as this one yet, so the price rolled over. But then this low was now higher than the previous low. And then what happened to the price? It started to follow into an uptrend. And over here, as we got higher and higher, you can see we printed a higher high because this high is higher than this one. And this low is higher than this low. And then for a short period of time, we started making another short-term downtrend. Right? You had this high over here. This over here technically was a lower high. Then we got a low that was lower than this low. And then the next high was lower than the previous high. And then again, the low was lower than the previous low. What happened again? Once the trend started to change direction, we started to make a high that was higher than the previous high, and then a low that was higher than the previous low. And then this continued. We had another higher high that was higher than the previous, another low that was higher than the previous. Then we kept going up to the upside, and yet another high that was higher than the previous, and another low that was higher than the previous. Then over here, you can see everything started to change directions again. So after this low was printed, we started making a lower low, and then the next high was a lower high than the previous high. After that was printed, we came down, boom, really quickly, and made another lower low that was lower than the previous low. So now you've started this downtrend scenario again. So what this means is that depending on which time frame you're using, you can capture the aggressive entries into these trades by entering on these higher lows and anticipating that a higher high could be following that. You could trade just this idea on these charts and be very profitable. Sometimes it can be a little risky, sometimes you'll get moves that don't go in the direction you expect, but it also means that if you were to enter into these higher lows, your stop loss should essentially go right below where that previous low was. Right? So if you were to try to enter into this trade, let's take the measurement tool out for the price range. This low was printed, we had a high, and then this low came in, and you would have tried to enter into this trend. So if you had entered into this trade, you could have had a stop loss down here at around 23%. Now it could be a little risky. Maybe you were entering closer to support. Maybe you pulled this level up and you were actually entering on the support level itself. The 20% risk that you would be taking would be if you got stopped out of this trade trying to enter into these higher lows. But this is an 8-hour chart. So for an 8-hour chart, the swings are a little bigger and the risk is going to be a little more extreme. So again, this is why we always suggest to scale into a trade a little bit at a time. Maybe after this big downtrend, you would have bought some initially on the first bounce. This would have been an oversold bounce on the RSI. And then once the high was made and it came down to that same level, this low is still higher than the previous low. So you could have entered a little more to your position over here. And once it came up again, you had another lower high, but then this time it was another higher low. This low was higher than the previous low. So the entry doesn't have to be just one shot, enter here, enter there, or enter here. You can split your entries up to thirds. You'd enter a little in this area, enter a little in this area, and if you get another higher low, enter a little more. So for this trade, if you would enter on this support level and following the higher low and the higher high technique, you could have moved the price, or the price could have ran up about 90, almost 94% of profits that you could have captured. Now again, this is an 8-hour chart, so if you're using a 15-minute or a 1-hour chart, these gains aren't going to be as big as they would be on these higher time frames. Now another extreme example is if you zoom way out. Over here we have the 3-day chart, And then this same thing happens no matter what the time frame is. You can do it on the 5-minute, you can do it on the 1 hour, 4 hour, 12 hour, 3-day, doesn't matter. The size of the swings that you're going to get are going to be relative to the time frame that you're using. So these are 3-day swings, okay? And the same thing's going on here. You had this low, and you had a high, then you had a really big higher low that was higher than this low. And what happened to the price? This is a very extreme example, but price ran up over 10,000% for BNB. And again, these are high time frame charts, but essentially when you're seeing a higher low or a double bottom on these really high time frames, that's essentially the start of a new bull run for that coin or for the market. Now we're going to look at BNB again on the daily chart, and we're going to apply it to the inside of a pattern. So essentially here, you wouldn't have had this pattern drawn at the time when the price was only over in this area. So once this low came in, and then this high came in, then the next swing to the downside was higher than the previous low, you also have some confluence here. So if you were to draw this support level, see all the bounces on this support, and then again over here you had another bounce on the support, and if you combine that with the higher high and the higher low technique, you would see that it was higher than this low, and it's on support and printing a higher low. So the expectation for this move is that the price should be making higher highs eventually. So this could be your aggressive entry into this trade, and if you entered into this part of the pattern, you could put your stop loss just below the support level here for this trade, maybe a 6 to 8%, 7% move to the downside, just for a safe entry into the trade. Now you've bought the bottom of the pattern. Now you can draw this triangle. And as you can see, this was the move that was happening before the breakout. People trade these higher lows just as much as they will for pattern breakouts or divergences or most any other technique. This is a trading style that most people will only trade this technique. So now that you've entered into this trade on this higher low, we've been waiting for this price to move up, potentially hit one of these targets, and then your stop loss gets moved up into profit. That way, if the price did come down and go the other direction, at least you get stopped into some profit without taking a loss. So that's another video today. Just wanted to quickly wrap up that idea. Practice this on the 5-minute time frames just to see how it works, and you'll be surprised how well it can play out for you.